dignitaries on the dais, CA R.R. Modi ji, Chetan bhai, it's always a pleasure to listen to you. Since long I am listening to you from different platforms. It is always a learning experience for me. Dignitaries of the dais, seniors in profession, and friends. The topic which has been given to me, emerging trends in anti-tax evasion measures. And when I got a call from our Central Council member, Evasion bhai, I was not able to realize I'd be speaking among such an august gathering. The list of illustrious speakers which has been say mentioned in the inaugural session. So I'm really fortunate to be here. And had I been here, I would have missed the very thought-provoking speech which has been given by Shri P.R. Ramesh Sahab in the morning. Really make us feel what would be the future of profession. Then we have deliberated about this forensic audit, another emerging trend and audit practice of the profession. And now I'll be discussing some of the areas related with a topic which is core to the hearts of chartered accountants, the direct tax, and particularly all the issues related to the search and seizure anti-tax evasion measures. So probably 5 years back, the topic of anti-evasion might have started with section 132 of Income Tax Act, search and seizure, and probably ended at 158 BC, that is block assessment, or 153A BC kind of thing, assessment in case of search. But nowadays, the canvas of topic has become very wide. It forced me to do a good amount of research, and then I realized that when I'm discussing this particular topic with this august gathering, I should not restrict myself to only some sectional analysis of income tax provision, but should try to focus on the broad picture, on the trends which are emerging not only in India but at a global level, and which are going to affect each one of us in near future. So I propose to analyze this whole issue of anti-tax evasion from this 5-6 different angles. Time permit, I would be interested in going the details of each one of them. But even if we are not able to do it, because I know I am speaking in a session which is a pre-lunch session, so very soon pre-lunch session is a very difficult kind of session to speak. जैसा हम हिंदी में कहते हैं कि साथ बहुत जल्दी फिर पेट की भूख जो है वो ज्ञान की भूख से बड़ी हो जाती है, and things start getting haywire. So I don't know how much time I'll be having, but still I would like to leave with you some broad areas which are emerging. And whenever we are talking about anti-evasion, nowadays we need to consider all these different aspects. The very first thing, the very first area is the same happenings at the global level. Some global efforts which are being done so far as this anti-evasion is concerned. And you might be surprised to know many of our taxation changes are happening because of these global changes, because of efforts which are being done by the global agency. Some very important impact which this whole exercise of data collection and information gathering is having on anti-evasion measures. Promulgation of some specific laws, Benami Property Act and all those, they are also having a very big impact on anti-evasion measures in our country. Provisional attachments, even before proving guilt, is another area which is developing. Action based on information, the evergreen topic of search and seizure, so far as this anti-evasion is concerned. And then another very important issue is the deterrent rate of taxes and penalties, which are also having a very big impact on anti-tax evasion measures of government. All these new sections, or rather redrafted section of 115 BBE and penalty under section 270 with AAB and AAC. I would like to discuss, I would like to give us a brief idea about these various aspects of anti-tax evasion measures. Let's start first with discussing the global trend. Friends, all these tax evasion issue We need to appreciate this thing that nowadays this anti-tax evasion is no more a simple tax matter of taxing unaccounted income. World over, it's not a simple tax issue. It is being seen as a part of a trilogy. It is being closely linked with trilogy of tax evasion, money laundering, and terrorist funding. And this nexus of these three has given this anti-tax evasion altogether different dimension. It is no more a local country-specific issue, it's a global war. Chetan Bhai has referred to that unfortunate event of 9/11, and we may also see footprints of that 9/11 events coming to all these anti-tax evasion measures. Countries have realized that this tax evasion is creating lot many social evils. Dirty money is being created that is being used to fund terrorism in different parts of the country. So globally there are efforts to check, to curb this tax evasion concepts. The very first organization which is fighting very hard so far as this anti-tax evasion measure is concerned, that is this OECD, Organization of Economic Cooperation and Development, an organization of around 120 countries worldwide. And in fact, these are OECD policies which are influencing anti-tax evasion measure of most of the countries. We will be discussing in the later part of my speech how some of our laws are nothing but exact replica of suggestions made by OECD. Based on those suggestions, countries are creating laws, their internal laws, they are implementing these laws based on this OECD measures only. Specifically, one arm of this OECD, this Global Forum on Transparency and Exchange of Information for Tax Purposes. There used to be the days where Swiss banks were considered to be tax havens of the world. Any tax evasion discussion invariably ends up at its Swiss bank accounts, but probably because of this OECD efforts and everything, that secrecy of Swiss bank account is very soon going to be a history. There won't be anything called tax haven in the world because of, say, work which is being done in these organizations. Apart from OECD, there is this another organization, FATF, Financial Action Task Force. Now what they are doing? They are setting standards and say promoting effective implementations of those standards by way of legal and regulatory changes in different countries. We all are aware that this Benami Property Act has been given a new lease of life in our country. It has been enacted somewhere in 1988, has remained dormant till date, and then only in November 2016, we again say promulgated it, given it a new lease of life. Now this Financial Action Task Force, FATF, it comes out with number of standards for anti-tax evasion measure. If one were to simply read this FATF along with our Benami Property Act, we will be able to realize that this Benami Property Act in its new avatar is nothing but an Indian version of recommendations given by Financial Action Task Force. And based on these recommendations, we may even extrapolate what is going to happen next, what may be the new kind of laws which Government of India might be coming. You can very easily find out based on recommendation of this Financial Action Task Force. You might wonder, this Benami Property Act has been re-promulgated in our country somewhere in November 2016. And if you were to simply search Google with the say keyword Benami Property Act, you will get another Benami Property Act being implemented in country of Pakistan also. And more or less exactly same time, somewhere in say August or September 2016, they have also implemented this law, and their Benami Property Act and our Benami Property Act, if you read it further, you will find it is more or less similar. What we call again in Hindi, comma, matra, samet, ek jaisa hai. It's almost same replica of Indian Benami, because the origin of both the laws are same. They are coming out from this Financial Action Task Force standards. So if we really want to update ourselves regarding what is happening in this anti-evasion measure, we need to go through this recommendation, the standards set by Financial Action Task Force, which are doing say massive work related with this anti-tax evasion measure. So in fact, what is happening at the global level, OECD is encouraging, facilitating exchange of banking information, other tax related information amongst the countries, and very soon we will see what kind of impacts these measures are having on our taxation system. But this is what OECD is doing. OECD and FATF are doing. They are encouraging exchange of information amongst say different countries. They are prescribing legal and operational measures which countries are say supposed to imbibe in their local tax laws. Peer reviews are being conducted. It's not like this that they are simply say proposing, suggesting something. There are peer reviews, mutual evaluation at country levels are happening. Countries are being categorized as compliant, largely compliant, partly compliant, or non-compliant countries. So far as this anti-tax evasion measure is concerned, India is a still largely compliant country. US is a still largely compliant country. Pakistan is still designated as a partly compliant country, and those countries, those jurisdictions which are being designated as non-compliant countries, Iraq and Syria and North Korea and these kind of countries, they are still non-compliant. So there are global sanctions happening against those countries, and the global pressure is being created on almost every country to implement those anti-tax evasion measures which are being proposed by FATF OECD. Now this is just the same global perspective, what is happening at the global level. The point which I like to make here, that nowadays all these say economies are so closely interconnected with each other that any fiscal issue, any taxation issue is no more the local country specific issue. Somebody might be thinking, sitting somewhere in the remote part of country, okay, I am simply not paying tax on this 10, 20, 50 lakhs of rupees. What difference it makes? I am simply liable to pay tax, or I am simply trying to avoid the payment of taxes. He may not be aware that from a global perspective, he might be seen as somebody who is ultimately facilitating terrorist funding kind of thing. These are the kind of say developments which are happening at the global level. These are the vibes which are spreading in the say global area so far as this tax evasion issues are concerned. Now, what is actually happening in our country? What are the say emerging trends in India based on these global vibes? How we are taking our anti-tax evasion system to different levels. A whole lot of India's recent anti-tax evasion, anti-money laundering measures from our basic KYC norms. Okay, there is a great amount of emphasis on this KYC issues everywhere. The whole lot of documentation happening. Every organization is forcing very heavily this whole KYC development. All these KYC norms, this prevention of money laundering, PMLA reporting, to Benami Transaction Act, to review of various DTAAs by India. All these can be very easily mapped to various OECD initiatives. What is specifically happening in Indian scenario? Let's try to go through these different Indian scenarios in a one-by-one manner. The very first issue related with the anti-tax evasion measure, and as I have said, that 5 years down the line, probably we would have talked only about section 132 so far as anti-tax evasion measure is concerned. But right now, number of things are happening at a different platform, covering all these anti-tax evasion measures. So the very first thing which has happened in India, that is rewriting of DTAAs, this double taxation avoidance agreement. We all are aware Mauritius used to be a preferred route of investment. Whole lot of money was coming, the majority of foreign investment in India was coming through Mauritius, because Mauritius was creating some very unfair tax advantage. So all these DTAAs were already rewritten. Activation of this whole Benami Property Act is another emerging issue so far as anti-tax evasion is concerned, and that is going to have a very long, very say deep impact so far as this tax evasion concepts are concerned. Reporting obligations. Different acts are having a very detailed third-party reporting obligations. PMLA is having its own reporting obligations. Income Tax Act, we all must have filed our Statement of Financial Transactions, SFT form number 61A. Newborn baby, that GST, is also having a very detailed third-party reporting obligation, enabling government to collect massive amount of data, to convert the data for identifying trends and vulnerabilities in the system. The fourth thing which is happening in Indian scenario, that is this provisional attachment powers. Provisional attachment, even without proving guilt, officers are being given power to provisionally attach your property under different acts. PMLA is again having a provision related with the provisional attachment. Income Tax Act, earlier IT Act used to have these powers only under section 281B, that is during the course of assessment. A very recent amendment made even under section 132 also. They have introduced subsection 9B there. During the course of search also, now they can go for provisional attachment. Benami Property Act is having a power for provisional attachment, and even GST is also having a power for provisional attachment. Provisional attachment is, again I am repeating myself, something legally it's a very shaky kind of proposition. You are depriving of a person from his right to property without even proving his guilt. But world over, again because of this international pressure, Government of India is also forced to have these kind of measures in their taxation and fiscal laws to go for provisional attachment wherever say authorized officer is satisfied that there used to be some kind of tax evasion matter. Search and seizures, some recent developments have happened there also, specifically related with the disclosure of reasons to believe. And then we have got all those sections of 115BB and everything, which are say providing now deterrent rate of taxation, deterrent rates of penalty in order to check this whole practice of anti-evasion. What is happening with respect to this DTAA front? There used to be days where 95% of direct or FDI of India used to come from this tiny country called Mauritius. Why so? Because that Indo-Mauritius DTAA was having a very unique provision where any capital gain arising from transfer of shares, capital gains arising to resident of country of Mauritius was taxable only in that particular country. That was the provision, Indo-Mauritius DTAA. The capital gain shall be taxable only in the country of residence. These kind of provisions were there, in fact, in 3 DTAAs. One is with Mauritius, second is with Cyprus, and third is with Singapore. So capital gain used to be taxed in the country of residence. And Mauritian tax law was having a very interesting provision where capital gain there was taxable at nil rate of taxation. So any foreign company making an investment in India, they were creating a SPV in Mauritius. From Mauritius, money was being routed to India. Capital gain generated here because of Indo-Mauritius DTAA, it was taxable not in India but in country of origin, country of residence, that is Mauritius. And because Mauritian tax laws were saying the rate of tax is 0, that whole capital gain was not at all taxable in any of the countries. Same thing was happening in Mauritius, Cyprus and Singapore. The only requirement of Mauritian tax law was this company should have a local address and should have at least 2 local Mauritian citizens as directors. There was research done by somebody, all these data is available on internet. There was a particular place in Mauritius which has been registered address of around 32,000 companies. 32,000 companies registered at one single address in Mauritius. There was a person, it has been found out through all these data analysis, there was a person who was a director in around 16,000 companies in Mauritius. A Mauritian resident, director in around 16,000 companies. All these foreign companies which were operating through Mauritius, they were taking, this person was actually doing a name lending, and somebody has said he was charging around $1,000 per year only from each company. 16,000 companies, $1,000 per year, that's all. Very, very economical, very, very gentleman kind of person. $1,000 per year only. All my audit practice, all my taxation practice will be peanuts in front of that kind of thing. This is what was happening through this whole Mauritius. Now, what has happened? Because of all these global pressure, all DTAAs have been rewritten. Now, from residence-based taxation, it has moved to the source-based taxation. Source-based taxation, that is, income shall be taxable in the country where the source of income is. The capital gain is being sourced from India. The shares are listed. Shares are registered, shares are of an Indian registered company. So the capital gain arising from transfer of these shares shall now be taxable in India. This is what exactly is this proposition before the amendment. Now, DTAAs have got a very typical way of interpretation that the language is not exactly same as we are used to study so far as income tax is concerned. Earlier, they were saying gains derived by resident of a contracting state from alienation of any property, it includes shares of an Indian company, shall be taxable only in that state. Only in that state, that means state of which the person earning income is resident of. This was the earlier proposition. Now what they are saying, and this has become effective from 1st of April 2017, gains from the alienation of shares acquired after 1st April 2017 in a company which is a resident of a contracting state may be taxed in that state only. Interpretation of DTAA is an altogether different ball game, where courts have said that may also needs to be read as a shall. Okay, may will mean shall here. So now what is happening, that the country of source, wherever that company is registered, that company can levy a tax on the share, on the capital gains arising from the transfer of all those shares, with a particular exception created for Mauritius and Singapore. A 2 years time window has been given. That is, if the capital gain is arising between 1st of April 2017 till 31st of March 2019, this will be taxed at the 50% of whatever is the normal rate of tax. So in India, whenever there is a short-term capital gain, we tax it at the rate of 15% under section 112 of income, 111A of Income Tax Act. For 2 years, now what does DTAA is saying? That capital gain shall not be taxed at the rate of 15%, that will be taxed only 50% of the Indian rate of taxation, that is 7.5%. There is a grandfathering clause which is saying that any investment made prior to 1st of April 2017 shall be subjected to earlier regime. Only when the investment is happening post 1st of April 2017, then this new rule, new requirement will be applicable. It will be taxable in India. For 2 years, it will be taxable at the say 50% of Indian rate of taxation. Cyprus treaty has not been given this flexibility. Mauritius and Singapore, still these 2 years 50% rate of tax is applicable. So this is say first amendment in this DTAA era. And another very important development which has happened, and where I was mentioning that this whole Swiss bank concept is no more relevant. Switzerland is not going to be a tax haven anymore. There is an agreement which has been entered into with Switzerland based on OECD recommendation AEOI automatic exchange of information. India and Switzerland both have ratified this particular agreement, and what they are saying, from September 2019 onwards, all information of Indian bank accounts in Switzerland shall start automatically flowing back to the government of India. So there is a time period, there is a window till September 2019, beyond which, after which, this whole Swiss secrecy concept will become a thing of past, will become absolutely redundant. Automatic exchange of information will get applicable from there onwards, and all these information will start flowing to government of India. A very important, all these anti-tax evasion measures are happening subtly, are happening behind the curtain. There is not much of the hype happening, there is not much of the media analysis, not much of the deliberations are happening, but these all are the measures which are hitting, which are creating a very significant amount of change in the landscape of anti-tax evasion measure of country. So rewriting of these DTAAs and then this information exchange with Switzerland, very important, very deep impact kind of measure so far as this anti-tax evasion is concerned. Now, let's come to another issue. I'm just trying to say, I'm just trying to discuss some broad measures which are happening. The time is not that much where we can go into say details of each and every specific aspect. But anybody who is interested in updating himself or herself regarding anti-tax evasion measure, my feeling is this: we need to have very detailed understanding of each of these trends which are emerging. So another very important, very significant development which has happened, that is this re-promulgation of prohibition of Benami Property Transaction Act. As I have said earlier, 1988 they have made this particular law, they have enacted this law. I don't know why, but never framed rules, never appointed authorities for actual carrying out that particular Benami Property Act. Now in November 2016, that PBTA has again been re-promulgated. Actually, amendment has been made in the original act itself, but now it has been operationalized. We might give political credit of all these things to any particular organization, any particular political belief, but fact of the matter is this whole Benami Property Act is nothing but a brainchild of that Financial Action Task Force. It has to be done, it had to be done only because of that international pressure, where India has been asked to become compliant country, largely compliant status was required. For this was a requirement that you need to have these kind of law. Very briefly, what is this Benami Property Act is saying? This requires very detailed discussion, probably 2-3 hours kind of discussion, but very briefly what this PBTA is saying: no person shall enter into any Benami transaction. And they have given this 4 different criteria of what will be treated as Benami transaction. Any property which is the subject matter of Benami transaction shall be liable to be confiscated by central government, and in certain cases entering into a Benami transaction shall land one into jail also. There are provisions related with the prosecution. We all are reading this, that government is going very harsh so far as this Benami property is concerned. Those who are tracking developments of, say, internal developments of income tax department, they must be aware that at every charge, at every commissionerate level, a separate wing has been created, a separate unit has been created, Benami property unit. Whole amount of data analysis is happening there, and then on a very frequent basis they are issuing notices. Lot many big politicians are already under net, lot many companies are under this net. 3 days back I read somewhere in newspapers, a Chennai based company, partner of a joint venture, has filed a complaint against another joint venture partner so far as this Benami Property Act is concerned. So all this business rivalry, professional rivalry, family library, all these are coming into picture. And Benami Property Act is slowly and gradually finding its feet, going to be a very, very big challenge so far as this anti-tax evasion issue is concerned. I would like to skip something of this Benami transaction, different kind of say transactions which are being treated as Benami transaction here. When we talk about emerging trend so far as anti-evasion is concerned, now this is another issue which has got a very big implication in say future anti-tax evasion measures is concerned. The massive amount of data which is being collected, and here where the technology comes into picture. In the first session, Mr. Ramesh has talked about the impact of technology, and this session Chetan Bhai has so lucidly discussed about various issues arising out of this technology so far as our audit profession is concerned, and even in case of our taxation practices also, this whole data analysis technology is going to have a very, very big impact. Large amount of data is being collected through Aadhaar linking, through compulsory PAN coding, third-party reporting obligations. Every act is having this third-party reporting obligations, and even simple normal return forms also now they are demanding so much amount of data. Even my normal simple income tax return, they want me to give all these bank details and all this Aadhaar linking and everything. So all this, and with this digitization of all this information, now data analysis has become a very important part of anti-tax evasion measure. Creating a 360-degree profiling, identifying trend, and locating vulnerabilities in the system. So anti-tax evasion measure is getting a very big impetus because of this whole collection and analysis of data. Income Tax Act, we all must have filed the section Form 61A Statement of Financial Transaction. Prevention of Money Laundering Act, Section 12B is having a specific reporting requirement. In GST also even, normally we say anti-tax evasion is related with the direct taxation system only, but even in GST also, they've got the section 150, 16 entities they have identified who will be required to file an annual information return about the matters which are yet to be prescribed, but the data will flow to the government system from 16 different entities related with this whole indirect tax issues also. Benami Property Act, there is a specific mention that whatever statement of financial transaction has been filed under Income Tax Act, that will be used by BPTV for doing all these data analysis and finding out trends so far as Benami properties are concerned. Just a very quick look towards the kind of reporting requirements which are there. All these information are required to be submitted by a bank. This is form number 61A, Statement of Financial Transaction. We need to consider the impact on our clients. Bank, we may not be helping banks in filing these kind of statements, but information related with our clients are being flown to Income Tax Department through the filings done by a bank. Cash deposit, cash withdrawal from non-business account, from business account, demand of payments, credit card payments, all these information is being flown to Income Tax Department through this banking company form 61A. Other than banking companies, these are other requirements which are there. All these different entities are required to submit these kind of information on an annual basis. What exactly is happening? They are slowly and gradually moving towards non-intrusive method of anti-tax evasion, simply collecting the data in the background, trying to create a profile, trying to identify a trend, and based on this, then they will be hitting on the real culprits where they found a big possibility of tax evasion happening. So these different kind of reporting requirements under Income Tax Act itself. Then apart from income tax, PMLA. Not only in income tax, but even under Money Laundering Act also, banks are required to submit detailed reports, financial institution, stock market entities, and PMLA is having an enabling provision government may designate any other business or any other profession for filing of different kind of requirements, for filing different kind of information. As of now, they have not designated any other business or profession, but even under PMLA also, the large amount of reporting requirement can be casted on different profession. Banks are already submitting these kind of information to the designated authority. Cash transaction report, basically PMLA is right now focusing on foreign currency transactions. If there is a foreign currency transaction of more than 10 lakhs of rupees in a month, then this cash transaction report is required to be submitted. Donation received by non-profit organization more than a lakh of rupees in foreign currency in a month, then this NPO report is required to be submitted. Suspicious transaction report, they have created some parameters based on which a transaction needs to be designated as suspicious transaction, and that report is also required to be submitted on a monthly basis by banks and financial institutions. The point which I am trying to underline, that the massive amount of data is flowing to the government. With this whole collection of, say, whole exercise of data collection, coupled with this technical capabilities of data analytics and big data analysis and all those issues, the government is sitting on a gold mine. Government is sitting on a, say, pile of information. We all must realize one thing. When they started this computer assisted scrutiny, what they call CAS, in the first year or second year, the kind of questions which were coming were absolutely absurd kind of thing. In number of cases, number of our clients might have got this scrutiny notice for no valid reason, because the systems were not up to the mark. But slowly and gradually, in last 1-2 years, we all are seeing now the scrutiny questions, the limited scrutiny concept, the questions which are being thrown by the system as a basis for scrutiny, they have become very, very accurate. They are getting accurate and accurate, pinpointing, hitting directly on the point kind of thing. So slowly and gradually, the sophisticated techniques are improving themselves, and now the government is focusing more on data analysis, hitting the target based on, say, real information, real data in their hand. Another emerging trend, which is little bit, say, disturbing also, is this whole concept of provisional attachment. Today, government can attach the property of any person, not only under Income Tax Act, but under PMLA also, but even in, this Benami Property Act also, and even under GST also, they have got this power of provisional attachment. As I mentioned, Income Tax Act was earlier having only the section 281B, where attachment could have been done only during the course of assessment. Now they are saying 132(9)B has been introduced by last budget, made effective from financial this 1/4/2017. Even during the course of such, before initiation of assessment proceeding, only on the basis of doubt, only on the basis of suspicion, the authorized officer has been given a power to attach the property on a provisional basis. Provisional attachment of property, that means depriving me from my right of property which is a constitutional right, at least in India, but you may be deprived only based on some doubt, some suspicion in the mind of authorized officer. Let's see what different acts are saying so far as this provisional attachment is concerned. The Income Tax Act says, under this 130, it should be 132(9)B, for 6 months, they can have a provisional attachment on my property. 281B, during the course of assessment, again property can be provisionally attached for 6 months, and that can be extended for further 2 years. PMLA is also having this enabling provision for 180 days, that is again roughly 6 months, they can attach my property on provisional basis. Benami Property Act, as soon as the initiating officer is initiating inquiry there, he can order a provisional attachment for 90 days, and then he can say this attachment shall continue till the order is confirmed or rejected by adjudicating authority. Even GST Act is also having a power of provisional attachment for 1 year. Now, provisional attachment is based on pure suspicion, based on pure analysis of situation by the concerned officer. It has not gone to the court. It has not been accepted by, it has not been resulted into final conviction. It has not finally resulted into a demand. Simply based on doubt, simply based on preliminary information, the provisional attachment is possible. What is the checks, what are the checks and balances kind of thing? Who can issue this order of provisional attachment? In case of Income Tax Act, they say the assessing officer or the authorized officer who is actually conducting the search, he can issue an order for this provisional attachment, but then he requires a previous approval at the commissioner level. CIT level, principal director, director level, previous approval is required. In the case of PMLA, this is director who himself will issue this order of provisional attachment. Benami transaction, again the initiating officer himself can issue this order of provisional attachment. And in Benami transaction act, this our income tax ACIT or DCIT level officers have been designated as initiating officer, and then they will be requiring a previous approval of approving authority, joint commissioner or additional commissioner of income tax. With their prior approval, he can issue this provisional attachment order for 90 days. Okay. Let's come to some more specific issues. What we have discussed till now was more, let's say, broad level kind of ideas. Now something more closely happening in our day-to-day working field. Some developments related with the search and seizure, so far as this new amendments are concerned, and then some say change in the rate of taxation, that what I call is the deterrent rate of taxation, deterrent rate of penalties, search and seizure. Each act is having say specific power so far as search and seizure is concerned. Income tax, the section 132 is there since ages. PMLA, section 17 is there. CGST, again having the specific power of search and seizure. Benami Act does not have any specific power of search and seizure. For all practical purposes, Benami Act is actually riding on the shoulders of Income Tax Act. All the information collected under Income Tax Act, that is being used by Benami Property Wing for further analysis. Any search, seizure, etc. conducted under Income Tax Act, that is only being used for further action under the Benami Property Act. But all other three acts, Income Tax, PMLA and this GST, they all are having specific power of search and seizure. A very important issue related with the search and seizure, we all know this, that the search and seizure should be based on reason to believe. The law always have these kind of checks and balances, that any officer cannot simply go and order for the search and the premises of any person. There has to be a specific reason to believe. And to that extent, requirement of all the enactments are more or less same. Income Tax Act, PMLA and CGST all are saying that when the person is having reason to believe, then only search can be initiated. The very important point is, what will be the basis of this reason to believe? From where this reason to believe shall flow? They say there has to be some information in possession which will ultimately lead to reason to believe. One very disturbing trend I found so far as this GST Act is concerned. Income Tax Act, they are saying reason to believe in the consequences of information in possession. PMLA, they are saying on the basis of information in his possession. The action under Benami Property Act can also be initiated only on the basis of material in his possession. So far as the CGST Act is concerned, it is giving some kind of, say, disturbing ideas. Though the search and seizure in case of GST is still is yet to come, but the provision which is there in the law is quite disturbing. What they are saying, either pursuant to an inspection carried out under subsection 1 or otherwise. Now, so far as interpretation of statute is concerned, we all can see that this otherwise creates us a very big window of opportunity. It gives a very big flexibility to the departmental officer. They may not be required to have any sound information in their hand. They may initiate the search and seizure proceeding based on some kind of say material, some kind of say information which may not be concrete, which may not be sound enough. But because the test using the word say otherwise the test of judiciary, he may go for the language seizure, is quite disturbing. In its very say fancy state right now, of this recording of with this reason to believe, whether these reasons to believe are required to be recorded. You needed to have information in possession which will lead to reason to believe. Whether this reason to believe needs to be recorded in writing. PMLA specifically mentions about recording in writing of reasons. Benami Transaction Act also talks about recording of reasons in writing. Income Tax Act and the GST Act has not mentioned it very clearly. Reasons must be there. Whether these reasons are required to be reduced in writing, they are required to be recorded in writing. Both of these acts are absolutely silent on this point. But then we have some decisions coming from judiciary. A very recent decision of Supreme Court in the case of the Spacewood Furnishing Limited, where court has said that though it has not been mentioned specifically in the act, but still in the order of say meeting the end of justice, it is necessary for the authority to record the reasons in writing. On what basis he has initiated the search, those reasons must be there, and then they must be recorded in the file of the officer itself. The real issue is next one. Reasons are there, even if they have been recorded by virtue of specific legal requirement or by virtue of say this court decision, whether these reasons are required to be communicated to the assessee or not. Since we are talking about emerging trends in anti-evasion measure, now this is another trend which has developed in say by virtue of this latest amendment in income tax, whether these reasons are required to be communicated. Somebody is coming to my client's premises and is saying that okay, I have been given this search warrant, I have been given this authorization for conducting a search. Why you are conducting a search? Because my approving authority has got reasons to believe that you are having unaccounted money, unaccounted income hidden in your premises. What are these reasons? May I ask? As per law, you need to have reasons. Are you required to communicate those reasons to me or not? Without the requirement of communicating reasons, the requirement of having those reasons become meaningless. So what is the present position so far as communication of those reasons are concerned? Whether they are required to be communicated, if they are required to be communicated, at which stage? At the stage of issuing authorization or at the stage of assessment, or they are not required to be communicated at all. Something which has been said by judiciary and then something which has been given by virtue of amendment in Income Tax Act. Judiciary has consistently maintained that demand of justice is this, reason should be there and they need to be communicated to the assessee also. But then courts have said that assessee cannot ask for these reasons at the time of search. When the search party is there, they are knocking at the door of assessee in the wee hours of say morning 4 o'clock, 5 o'clock. At that time he cannot say, I will not allow you to enter into my house unless you show me what are the reasons of that particular search. That is a very settled position of judiciary. Judiciary has said that reasons must be there, they need to be recorded, they need to be communicated, but communicated only at the time of commencement of assessment. Let search should take place, let search party do whatever they want to do. When the assessment will happen, then assessee will have a right to ask for reasons why you have conducted search at my premises. So judiciary has said that thing consistently. But even that right of asking reasons, not at the time of search, but at the time of assessment, even that has been taken away by this recent amendment in income tax. Again, I am saying all these developments are very subtle. They are happening without much fanfare, but they are having a very deep impact. They are having a very long-rooted impact so far as all these anti-tax evasion issues are concerned. Now, in this Finance Act 2017, they have said, for removal of doubts, it is hereby declared that reason to believe shall not be disclosed to any person, any authority, or even to appellate tribunal. The words are very, very important. They will not be disclosed to any person, any authority, or any appellate tribunal. First of all, whenever they bring this kind of amendment, which starts by saying for removal of doubts, I always have a problem. Doubt in the mind of whom? Various amendments they have introduced by saying for removal of doubts. To our mind, there was never the doubt. We were always going by the court decision, and we were always going by the demand of natural justice that reasons must be there and reasons must be shared with the affected person, reasons must be shared with the accused, reasons must be shared with the victim. If you are, say, arresting somebody, you needed to tell him that this is what you have done, and that's why we are arresting. Search is also kind of, say, invasion on my privacy, creating all sorts of social stigma, all sorts of issues for me. So you needed to tell me, even not at the time of search, but even at the time of assessment, you needed to tell me. That is the plain, simple demand of justice, that I need to be told why I have been subjected to all these harassment. So to my mind, there was never a doubt. But here they are saying, for removal of doubt, so probably doubt was not there in our minds, doubt was there in their minds whether the reasons are required to be disclosed or not, and to clarify their doubt, they have brought this particular amendment and saying these reasons shall not be disclosed to any person, any authority, or even appellate tribunal also. So what is called in legal parlance the theory of, say, judicial scrutiny of that reason, even that has also been taken away. Even an appellate tribunal also cannot go into the justification of those reasons, though the law is saying reason to believe should be there, and courts have said again and again reason to believe and reason to doubt are again very, very different thing. You need to have some sound reasons. You cannot go and have a search based on simple doubt, based on simple suspicion. You need to have sound enough reasons. These reasons need to be recorded. But now they are saying that these reasons shall not be shared with any person, any authority, or any appellate tribunal. Probably for knowing those reasons, I need to go to High Court or Supreme Court only, because they will not bar the say jurisdiction of courts so far as these reasons are concerned. But to what extent courts will be of help to me, because they may share it with the court, but law says that they will not still be sharing these reasons with the person, even with the affected person also. So it's a very important development which has happened so far as this search anti-evasion measure is concerned. And memorandum to Finance Act say explain it very nicely. In order to maintain confidentiality in everything, these reasons will never be disclosed, will not be shared with anybody. The point again which I am trying to make, so far as again this anti-evasion measure is concerned, we needed to broaden our horizon. We are not, 5 years earlier, we were only concerned with income tax, but today not only income tax, but PMLA, but Benami property, all these acts are also very, very relevant. So this amendment has been introduced only in the Income Tax Act. Income Tax Act, they are saying that these reasons are not required to be disclosed. What will be the position so far as search under other acts are concerned? PMLA is there, GST search is concerned. There also law says reason should be there, reason to believe should be there, they need to be recorded also. So whether the judicial rulings which are saying that reasons need to be shared, in Income Tax Act these rulings are no more applicable because of specific amendment, but in other acts whether those rulings are still applicable. So a search tomorrow happens in, say, premises of one of my client under Prevention of Money Laundering Act. Whenever the proceeding beyond that search happens in PMLA, whether I can take benefit of the Supreme Court ruling and ask for reasons of such under other acts, that is still a question which is open. Income Tax Act, they have barred that reasons will not be shared, but in other acts there is no such corresponding amendment. So there still that ruling still hold good, that the reason our ACAE will be well within his right to demand the reasons for action taken against him, at least in other acts. And now, finally we come to say the last kind of trend which is emerging so far as this anti-evasion is concerned, that is this deterrent rate of taxation, deterrent rate of penalty on unaccounted income. Number of times it is said that the need of any provision is law is not only to catch the offender, but more importantly to create a mindset among general public not to do that kind of offense itself. There is one thing, somebody has committed that offense and then you are catching hold of him and putting him subject to all sorts of penalties and prosecutions and everything. And another thing is this, you have these kind of law where people think twice before doing any kind of say hanky-panky activities. So two very important amendments which have been made in income tax, which will be ultimately having impact on all these say issues of tax evasion in our country. That is amendment related with the rate of taxes on income which are unaccounted, unexplained, and second is the penalty which will be applicable in case of such. Both of these amendments have been introduced during the course of this demonetization by virtue of a special act, that is Income Tax Amendment Act 2016. First is the section 115 BBE. What has happened during the course of demonetization and during the course of all those income disclosure scheme and everything, where the rate of tax has been proposed as 45% and 60% and all those, it has been pointed out to the government that rather than declaring those income by way of these special schemes, it will be very easy for an ACAE to offer that income simply by way of his return and pay the tax at the maximum marginal rate of 30%, and thereby this whole idea of income disclosure scheme and everything would have been frustrated. So during the course of pendency of those scheme, income disclosure scheme itself, the government has introduced this particular amendment. Because the amendment has been introduced in little bit of haste, it has started creating some other problems also. But first of all, what these changes are saying, first is this section 115 BBE. Around 2011-2012, they have introduced the section 115 BBE dealing with income which has become taxable because of section 68, 69, 69C, 69D, basically what we call the income where nature and source of income cannot be explained. Somewhere in 2011-2012, they have introduced this section 115 BBE, which was saying that any income which get taxed because of these sections, that will be taxable at a flat rate of 30%. The original avatar of this section 115 BBE. And in fact, I feel, sir, in this whole income tax, this section 115, the number 115 is something very important. All these important provisions of income tax, I don't know what is the beauty of this section number 115, but we will find all these important typical provisions of income tax sitting right at number 115 only. The special rates of taxation for royalties and foreign copyright fees, that is the section 115. All our MAT provisions are there, section 115. Dividend distribution tax, again 115. That age-old fringe benefit tax, they have ventured into sometime, that was also sitting at this 115. So number 115 of the Income Tax Act is something of say all special provisions of income tax. So for this taxability of this unaccounted income, again they have gone to this 115 route, section 115 BBE. And what 115 BBE is proposing, now they are saying that any income where I am not able to explain nature and source of that income, that shall be taxable at the rate of 60%, plus surcharge at the rate of 25%, plus cess at the rate of 3%, making an effective rate of taxation 77.25%. Surcharge in this case always applicable. There is no concept of 1 crore or something like this. Always the surcharge is applicable. 60% plus 25% plus cess. And then, if this income has been offered by way of return and tax has been paid before the end of relevant previous year, no penalty is payable. If these conditions are not met, assessing officer can hold of these kind of income during the course of assessment, then an additional 10% of tax is payable by way of penalty, so making the effective rate of taxation 83.25%. This is what is the amendment which has been introduced and which has made effective from the date of applicability itself, somewhere in the month of say September, October 2016, they have made this amendment effective. Now, what essentially they are trying to say, and within the same time available, I would try to draw your attention. I would try to draw your attention to the danger which this amendment proposed, not only so far as say tax evasion is concerned, but even during the course of our normal assessment also, the kind of problem this amendment is going to create. But what they are saying on the face of it, that any income when I am not able to explain the nature and source of it, any amount found credited in my books of accounts, any investment, any asset, I am not able to explain the nature and source of this, taxable under the section 115 BBE. Plus a penalty may also be applicable at the rate of 10% of tax. No deduction, no set off of losses. Not even the basic exemption limit is applicable. So I might be having carried forward losses, might be interested in adjusting those losses with this kind of income, but if income gets covered under section 115 BBE, then all those losses are not adjustable, no deduction, no basic exemption limit, nothing is there. The penalty can also be levied, but they have got a very interesting provision in law. And sometimes in income tax, you find a provision, you are able to understand a provision when only you read it twice or thrice or 4 times. Otherwise, you feel this provision is something of a okay, normal kind of provision. In case of penalty, in order to save that penalty of 10%, what they are saying, you need to pay tax. That tax needs to be paid not up to the due date of filing of return, but what they are saying, that tax needs to be paid before the end of the relevant previous year. So I'm going to have any kind of income which is covered under section 68, 69, etc. I need to offer it in my return, and a normal understanding would be that whenever I'm filing my return, then only I'm required to pay tax on this. But what they are saying here is that tax is required to be paid before the end of the previous year. That means before 31st March, I need to find out that these are the kind of income which are unexplained income. I am going to offer them in my return by way of unexplained income, and on that basis, I need to pay the tax on that particular income before 31st March. Otherwise, I am subjecting myself to penalty also at the rate of 10%. Now, the biggest problem, the biggest threat which this section is going to create, though it has been introduced as a deterrent against tax evasion, but now it is going to have repercussions even in normal assessment also. Now this particular amendment creates 2 categories of income. One is my normal income, taxable at the normal rate, and another is the income which is taxable, which is subjected to the special rate. Even during the course of normal assessment, now assessing officer will always have a temptation to characterize my income under section 68, 69, something like this. Now what say, for example, 68 is saying, we always tend to say, relate the section 68 with cash credit kind of thing, any unsecured loan kind of thing gets characterized as under section 68. But 68 basically talks about any kind of credit in my books of accounts, the nature and source of which is not explained. Now there is a credit in my books of accounts, and I'm offering this as my income, and that income I'm paying tax on the same normal basis. Now assessing officer will have all the reasons to ask me what is the nature and source of this kind of income. I'm paying tax on that particular transaction. I'm saying this is my income and I'm paying tax at the normal rate on that income. Assessing officer will raise a question, okay, explain me the nature and source of this income. Now, practically speaking, for every kind of income, I may not be in a position to explain the nature and source of this. Say, for example, I'm running coaching classes. Now, through coaching classes, I'm getting good amount of money. Majority of students pay their fees in cash to me. I'm crediting that particular income in my books of accounts, offering it as my normal business income. Now, assessing officer will say, explain me the nature and source of this income. Nature I can still explain. Okay, I am running coaching classes and having this income from my coaching classes. Now he will be asking to explain the source of that income also. I may not be having data of those students, their name and addresses and all those details. Assessing officer will always have a temptation to characterize that income not as my normal income, but the special income, take it to section 115 BBE and levy this higher rate of taxation. So the amendment which has been introduced as a deterrent amendment in order to say deter the normal assessees going for say tax evasion kind of thing, now that has become an enabling tool in the hands of assessing officer to create all sorts of issues, to create all sorts of harassments during the course of an assessment. Till now, my thinking was this: if I am offering something as my income, so that is good enough. I'm already paying tax on this, so fine enough. The matter is that I'm paying tax whatever normal rate is applicable. But now, because of this amendment, even if I'm paying tax on any income, I need to have all the details about nature and source of that income. Otherwise, I will always have the danger of the same income getting characterized under section 115 BBE, and assessing officer is levying this higher rate of tax plus penalty. So the income which I was paying tax at the rate of normal 20-30%, along with tax and penalty, the same income may get taxed at the rate of 83.25%. That's a very big danger. That's a very big problem this 115 BBE is going to create so far as assessment of this assessment year 17-18 are concerned. Whenever these assessment will happen, this section will become a very big tool of creating problems so far as normal assessments are concerned. After this 115 BBE, now the last development that is related with the penalties in such cases. There used to be the section 271 AAB talking about penalty in such cases, and this older version of 271 AAB was having a graded system of penalty. A search has been conducted on the premises of assessee. He declares some income during the course of search itself, files return, pays tax. Section was saying 10% penalty. He doesn't declare the income during the course of search, but before filing of return, he gets an antaratma ki awaaz kind of thing and pays tax during the course of filing of return, 20% tax. Or if this even does not happen, assessing officer finds something, then the penalty was at the rate of 30%. So 10, 20, 30 was the graded rate of penalty so far as this earlier avatar of 271 AAB is concerned. Now, what this 271 AAB is saying now, straight away the rate of penalty so far as this undisclosed income is concerned has been increased to 30% or 60%. 30% of undisclosed income or 60% of undisclosed income shall be the amount of penalty. If certain conditions have been fulfilled, the penalty is 30% instead of the 10, 20, 30. Now the basic rate of penalty itself is 30%, and if these conditions are not fulfilled, then the rate of penalty shall be 60%. A very important point is, and that is again going to create a very interesting issue so far as assessment of these such cases is concerned.